This is a good news report, Mandeep, isn't it?
It is, and I think a lot of the fears around core search business were overblown. So they handedly beat the core search estimates by about $1 billion, so a clean beat, and that's what translated into an operating profit beat. And look, I think ChatGPT, a lot is made about what it could do to the long-term margins and search volumes. But right now, I think Google, as we know it, continues to be the dominant search player. Yes, it could have an impact in terms of their gross margin profile, and I do think it will have an impact. But in terms of the ad stack and the ad spend, it's still advertisers will still go to Google for the highest ROI on their ad spend, and that's what we are seeing in this print.
Okay, so dominant market share continues to be a story for Alphabet, but what's also a story for these big tech companies is their use of cash and how they're managing their expenses, which feels a little bit weird when you think about how that was not part of the appeal of these kinds of companies. And on that front, Alphabet is buying back shares. It's also authorized a buyback of up to $70 billion, and it's also taking more action in streamlining its expenses. Were there any kind of expectations built into that?
There were, because they announced a 6% layoff at the beginning of the year, and clearly that could have generated about $4 to $5 billion in cost savings on an annualized basis. So you do expect that to translate into better capital allocation, and that's why they're increasing the buybacks. I do think they will have some gross margin headwinds later this year because of the higher infrastructure cost tied to ChatGPT, and that probably will be bad news, which we'll find out in the earnings call, because YouTube, again, it raises your infrastructure costs. Now the search infrastructure costs are going up, so from a gross margin perspective, they will have headwinds for sure.
I am curious about just the advertising revenue overall. I mean, obviously, this is the crux of the business. It has held up. It is still coming in above estimates. As a pure play advertising company, which, let's face it, a lot of people still view Google as that here, why are they holding up better than some of their competitors?
Well, so think of, the ad pricing for Google ad slots is always most resilient, and Google has the broadest advertiser base. Meta is more indexed to small businesses. They're more focused on retail and e-commerce. Google is diversified. So this is actually a reflection of how well the economy has held up. And we talk about, soft landing, but Google is indexed to GDP, US GDP, global GDP. And right now it's a reflection of advertisers continuing to spend on Google, and there is no alternative when it comes to the ROI on ad spend.
I do want to get your thoughts on YouTube and the YouTube ad space specifically. This has been a consistent bright spot. It's still a relatively small part of their business compared to the others. But investors have really had their eye on this, wondering sort of what more they can do with it.
And I think YouTube will be the biggest driver of ad sales growth going forward, even though it may not show up in that growth metric right now, simply because YouTube has the engagement. Think of, the streaming time that YouTube has versus the other Netflix or any other streaming players. And right now they are being under-monetized simply because advertisers still haven't moved past, Google Search, for example. They still think Google Search is a higher priority platform. But over time, as streaming and linear TV moves to YouTube, which I think it's going towards, you will see ad pricing go up.